Welcome to Core Wealth's September monthly report back. It's also the end of the quarter, so I'm going to give some insights into what happened over the last quarter as well. As we stand here, we are through the pool stages of the Rugby World Cup and hence the attire. It's Friday at the time that we're doing this recording, and the Springboks are still to see who they'll end up playing in the quarterfinals, but we're still holding thumbs for them. If I look back over the last month, there's been, as usual, a number of things happening both politically, economically, financially. The US has cut interest rates again. South Africa didn't cut interest rates this month. There's an expectation by some in the markets that we'll see a cut before the end of the year, although the Reserve Bank governor is hedging his bets a bit. It doesn't sound like he's too keen to do that. Over the last month, markets have actually been okay in September. The equity market, the JSE, was up just slightly, and global markets were also up a fair bit over the month of September. Many of you will be getting your quarterly statements around about the time this video goes out, in fact, and you'll see the returns over the last quarter. Over the last quarter, things haven't gone as well as we would have liked. Equity markets in South Africa were down just over 4%. The listed property market was also down a similar amount. Fortunately, global markets, global equities in particular, were up quite strongly, but mostly because the rand weakened over that period. So you'll see over the quarter that some of the portfolios were down marginally for the quarter, but over the last month, all of our portfolios, in fact, were up for that period. International was the place to have been over the last quarter. Should you be worrying about what happened over the last quarter? If you have a short time horizon, in other words, if you're going to be spending your money over the next 3 months, then yes, one should be worried, or not worried, one should be looking at what happened over the last quarter with more attention. However, if you're a long-term investor, quarterly moves are not something that should necessarily make you more concerned or more happy even if they've gone well. Think of it this way. Do you look at the value, if you own a property, do you look at the value of that property every month or every quarter? I doubt that most of us even look at the value of our property over an annual basis. And the reason for that is that generally we're buying property for a long-term investment. We're expecting to live in it probably for possibly even decades. Now, your retirement savings or any long-term savings is exactly the same. So we get information, we can get information daily, but I just want our clients to be thinking about when you get a statement, should you be concerned if there's movement from one quarter to the next? So having just told you that if you're a long-term investor, there isn't a need to be looking at investments in the short term, what should you be looking at? Now, a key thing that we spend a lot of time trying to understand is what are the future returns of different asset classes likely to be. And that's really looking at how expensive shares are. And I can tell you at the moment there's a lot of shares in South Africa that are looking very, very cheap. In fact, even at levels that we last saw in the global financial crisis. And there are the bonds in South Africa, our bond market is also, the yields there are very attractive. And something that is a relatively low risk and you're getting a good return on it. So those are two examples where from a long-term perspective those investments are looking attractive, and hence we're quite positive on what we expect to see over the coming years. And those are key factors to be looking at in a portfolio. How expensive are the markets? Because markets will go up and down, but that's not something for investors to get concerned about. In the monthly wrap-up, we actually have got a little insert where we've done some analysis just to explain this point, where we've looked at our defensive fund, which generally is for investors who've got, say, a 3 to 5 year time horizon, possibly even longer. And over the last 3 years, this fund has actually not given a very good return because equity markets have been particularly weak. And if you looked at just at those 3 years, you would think that you shouldn't be using this type of fund in your portfolio. However, if one looks at the last 6 years and the last 7 years, you realize there are periods where where this fund has done exceptionally well. And the last 3 years have shown that on the back of weak equity markets, it's underperformed for that reason. And again, looking at that context, one can realize that if you keep the long-term perspective, you will be rewarded as equity markets normalize. In order for us to see the economic growth that we need in South Africa to create the jobs that are so desperately needed, we need to see change. That's not going to happen overnight, but in the last basically 5 weeks, there have been a number of interesting things that we've seen happening. The biggest one is probably the economic policy document that was launched by Tito Mboweni, the Minister of Finance. Exciting to see something that looks like it's really heading in the right direction. A lot of things in there, not necessarily brand new, but as a collective, something that was broadly accepted and positively received by the markets. In the more recent past, there have been a few things on the anti-corruption side. We've seen the Hawks raiding the previous mayor of Durban's home and attaching a number of assets there that are potentially linked to corruption that was happening at the eThekwini municipality. We've seen raids on Iqbal Surveys companies that again were involved in some underhanded dealings linked to possibly to the PIC. And probably the biggest one that came out this week was the United States government actually essentially issuing sanctions on the Gupta brothers and one of their business associates. So the pressure is definitely rising against corruption, and not just rising in the sense of getting more airtime, but there's actions that are being taken, and we're seeing those kind of things. And I think that's not just positive in the sense of getting potentially attaching some of those assets and getting funds back that have been stolen, but also just in the broader economy seeing these type of things and confidence raising. If there was one thing that we could change to get the economy going, I think it would probably be to have more confidence, both from a government point of view in the sense of them investing into infrastructure, as well as from a private sector point of view similarly, because to create jobs we need to be investing into productive infrastructure, and that's what's really going to get the economy growing in future. This year the economic growth is still projected at probably somewhere around 0.8–0.9%. Next year we'll probably see that possibly even doubling, and in 2021 expectations of around 2.5%. So there is growth happening, not quickly enough yet, but we are seeing an improvement, and as more and more of these changes feed through, I think we'll see an upside in economic growth. You factor that in with the level of or how cheap shares are on, especially South African facing shares on the JSE. As a long-term investor, a number of those shares look very attractive. Right, in conclusion, September was an okay month. All the portfolios were up slightly. For the quarter though, listed equity markets and listed property were down, and so we saw one or two of the portfolios having slight negatives for the quarter. If we look ahead, we're optimistic on local equity over the longer term. In the shorter term, the fixed interest market also looks attractive for more conservative investors, where you can get 7–8% return on a conservative income type portfolio. Looking at globally, we have global assets in all of our portfolios, and some of our clients we're managing just their global assets for them. There are opportunities around the world. Some markets have been affected by the most recent turmoil, and you're able to pick up shares in some of those places. Europe, the UK, emerging markets. Japan's also looking quite cheap at the moment. But again, finding managers who can take advantage of some of those attractively priced opportunities. At the end of the day, you need a portfolio that's got all of those assets in it to more or less a degree, depending on the portfolio's requirements and the client's requirements. That's what we have in our portfolios, and so we're trying to we're urging our clients to take long-term views on their portfolios, where you have a long-term view, of course. A short-term portfolio will just have a more conservative income focus to it. So that concludes what we wanted to talk about today, other than to say that we hope the Springboks carry on doing well and ultimately bring home the trophy, but we can see where we are at the next monthly wrap-up in a month's time. Thank you.